Ben Sobanski here with One Stop Financial Group, here to discuss what it means when your loan officer tells you that your loan is now in underwriting. Okay, so we've taken the time to write your pre-approval. You've shopped around for a house, you found one, you work with your realtor and your loan officer, you've put the best offer in you can, and your contract has been accepted. So what are the next steps? Well, we submit your loan over to an underwriter that's going to take the time to verify all the information that we use to pre-approve you. All of this nowadays is done through an automated underwriting system, or more commonly referred to as AUS. The first AUS was Fannie Mae's desktop underwriter that rolled out in 1994. This is more commonly referred to as DU. Now, as loan officers, we actually run DU at pre-approval based on the information that we discuss and the information that we verify. So that's why when we're writing your pre-approval, we verify your income, your assets, and your credit, because once you find the house, all the underwriter is really going to do is go in there and just make sure that the information we provided was entered into AUS accurately. Now, these AUS systems are what allow us to close loans so quickly, because when we write your pre-approval, we run your information through it, and it actually gives us the full list of what an underwriter is going to need to verify to make sure that you're approved for the house. So how do we go about fully getting your loan over to the underwriter to double check the information? Well, first, we have to get you a set of disclosures, right? This is your initial set of disclosures. It's going to give you a full breakdown on what your loan is, what your fees are, what your interest rate is. Your initial loan disclosures will contain a document called a loan estimate. Right now, the loan estimate is an industry standard form that all lenders have to disclose to you within 3 days of receiving your executed purchase contract. This allows you to shop and compare loans side by side, because it has to put the fees and the information in the same boxes, so it's easier for a consumer to understand. Now, after you've received your loan disclosures, you're going to sign them. You're going to get them back over to the loan officer. The loan officer is going to take that information and submit it to underwriting. This is the easy part, because we've already kind of verified the information. So once we've sent the information over to an underwriter, typically we need income, assets, verification of your identity. Depending on when we wrote your pre-approval and when your contract gets accepted, we may just need to update some of that information, because it has to be within 30 days. The income has to be within 30 days of the submission, and then we need either 1 or 2 months of bank statements, depending on the program that we're going with. A lot of this can be done automatically. It just depends on how long you've been at your job, how you get paid, which bank you go through, and if they have online banking. Definitely something you want to discuss with your loan officer to help streamline the process. As a quick reminder to all borrowers, email is not a secure form of communication. What I mean by that is, like, hackers will monitor, especially loan officers' email inboxes to try to catch any information. So it's very important that you don't ever email anything that contains your social security number. You want to work with a loan officer that's able to get your information from you securely, either through an online portal or if they have a way to encrypt emails. It's something you want to discuss, because it can be a little bit different loan officer to loan officer, but you want to make sure that it's always a factor in there that's protecting you. Now, as always, if you have any questions at all, please don't hesitate to reach out. My number is 586-453-2058. I'm always happy to answer any questions that you have.